But expanding more on these acquisitions and maybe looking at the cash, sort of 68 million market cap and cash growing to sort of 27.6, 28 million with zero debt, which is extremely remarkable given how much of that cap is covered by cash alone, almost a majority, with earnings still growing. There was I've seen some forums and there was a comment about, is it actually debt free? I mean, some of the filings show lease obligations, which obviously aren't the same, but are you able to address some of that in terms of what that is? And
It's accounting treatment basically. So we have a couple of leases. We have chartered in a couple of ships that we have then fixed out at the same time. So effectively, we have fixed them out profitably
mm,
uh, for almost the entire period that we have the vessel, and the other one for about half the period.
yeah,
So the accounting treatment basically treats it as if it was a lease and takes the entire lease amount and puts it on a book.
yeah,
But not any debt. And as I said, I've already chartered the vessel out. So effectively, cash out from my pocket to run that is zero.
yeah,
So even cash out, so I'm not even saying forget about the debt. It's not even cash out. So somebody who I've chartered out to is paying me the money.
mm,
I'm taking my margin on that, and I'm paying the rest of the money out to the person I took the vessel from.
exactly, yeah,
Effectively, as
obvious,
it's zero. But okay, this is accounting treatment, so I have to put it on. But
yes,
I have not. This is not a financial lease that I have,
mm,
taken a ship for 5 years, 7 years, 10 years. That would force me to put it on.
yeah,
And then there is another vessel that this is the offshore vessel, where again we make a small margin, but we've chartered in the vessel to charter it out. So
mm,
on both ends, it's fully secured. I'm just making my margin. I have no
yeah,
cash out at all whatsoever.
mm,
And again, but as per accounting US GAAP treatment, I have to take that lease obligation and put it on my books. So, I mean, I can equivocally say that I don't have any debt per se on the
exactly.
balance sheet. But of course, as per accounting treatment, I have these lease obligations which are put on my balance sheet as debt.
It's really helpful because obviously we've talked about the Uber of shipping as a sort of quick way for people to understand. But equally, it's almost like, I don't know how many colleagues you have in property, but it's almost like the Airbnb model where someone takes a home, an asset like maybe a ship or a property, and then takes it off of kind of a long-term market and moves it onto the short-term higher rate Airbnb market and makes profit, but has no obligations if that home actually goes under, or like you said, fleet renewal needs and need new builds or whatever. So yeah, I think that's obvious for some people, but it's good to address it for others as well.
Sure.
And then just expanding on the cash a little bit more. Earnings have been great. How is that? Is that cash pile growing just on the earnings? What else is growing that cash pile?
No, it is basically the earnings which are growing. I mean, they earn a little bit of interest, but it's not significant to talk about. So effectively, the earnings are what are growing the cash pile, and
Yeah.
we will address that and look at that at the right time in terms of acquisitions. I have said very clearly that I'm not looking to grow for the sake of growth. It has to be accretive growth. It has to be something that is beneficial to the shareholders.
Mm,
I am a significant shareholder myself. I'm in the same boat as the rest of the people out there. So we want to use this for the right purposes. Uh,
exactly.
so we are always looking at what is out there, but it would be so easy to go out and buy a ship, but it's not the point. I mean, depending on the cycle, where things are, whether it makes sense. Whereas these businesses that we're looking at, like the acquisition of the management company, we used a very small portion of our capital
Very
to
impressive.
acquire a strategic platform. This company operates in Netherlands and in Turkey and has crewing presence in Ukraine as well. So
Mm,
now we start to gain again our own crews, but we also open up a presence in two important markets. Turkey, especially, there is a big Turkish ship owner diaspora out there, and the model that they follow. So they invest in vessels, they do the commercial, but the technical is generally outsourced. But also on commercial, it opens doors.
Yeah.
So now we are established in Turkey, so we can provide services in Turkey with a Turkish face. And at the same time, there are coastal opportunities around the Northern European market
Yeah.
based out of Holland. It's not just the Dutch market that we have
Yeah.
touched. By being established in Holland, we can service all of Northern Europe.
Yeah.
So it opens up different markets, and the we spend 200,000 euros doing it. 200,000 effectively is 1 year's net income with zero growth.
Mm.
So if in a year's time, I will have recovered the money that I've spent in this company, and then if I grow even one, two, three, four vessels on this platform, all of that is net income.
Exactly. Yeah. I was really impressed by,
Yeah.
yeah, really impressed because bear in mind, you bought it for 200,000. Sort of striking, bearing in mind, some of the vessels you service earn that in a single voyage. So it's really, really impressive, and it just highlights the asset light or zero asset model with sort of 50% margins. And it sounds like you are absolutely open to doing sort of big acquisitions. The cash is now half of or a majority of the market cap. And yeah, I think that's those acquisitions are only going to really increase and make things motor on even faster. I mean, how are you? Is that? It sounds like it absolutely is to continue those acquisitions. I know. You pulled out of was it the A oblique deal, which was another one, but we've had sort of five vessels and now nine, and then a pull out of that one. The reason I mentioned that is actually it's quite helpful because clearly there's a lot of discipline there, and if something doesn't fit your criteria, you won't pursue it. So I guess what maybe are you looking for in terms of those acquisitions?
We are again looking at service companies that we can add ships complementary to what we're doing. So effectively, we have the commercial management platform, we have the technical management platform on the tanker side. And so wherever we can add to that, those are areas which are of interest to us.
Yeah.
And then, of course, I have stated categorically in the past as well that dry cargo is of interest to us.
Mhm.
So if we see any interesting opportunities to build up dry cargo commercial expertise, then that is something that we are interested in as well. But so far, I mean, where we are focused is on services. That's what I think gives us the biggest bang for a buck. It builds up the platform, and we have built the components of the platform. Now we're looking at scaling up the platform.
Yeah.
So we are seeing some opportunities out there that could help us scale up quickly.
Yeah.
And then, of course, you understand that as we scale up and the EBITDA grows, with EBITDA, the margin will grow as well, which is a critical thing. That right now we're trading at a couple of turns of our EBITDA, but our peers are trading, some of them are as much as 45 times, but let's say that's a
Yes.
dream. Even if we were at 10, 15 times, it would be substantially higher in terms of the stock price than where we are.
Yeah.
So I think that's the objective is to grow both in terms of course, our EBITDA, but also, push the message out there so the multiples that we trade on improve as well.
Exactly. I mean, just if everyone's thinking, what's the market cap and what's what. I mean, if you imagine current market cap, cash takes off, 50% of that. So you're buying half the business for basically free, and you're trading at a four times forward multiple. Whereas, like you said, 10 to 15 is kind of where others in the space, more logistics companies, are even 25 times and 40 times. So, but bearing that in mind, the share price could almost be four times higher from here just on the multiple, and then you've got the cash which gives the 50% off of the actual market cap anyway. So you're buying, yeah, it gets very interesting when you sort of do the numbers. um just going back to those acquisitions, do they need to all be strategic? Because well, I do know some people that do introduce acquisitions, and they might be just very, very profitable deals. Do they all need to be very strategic, or can they be just profitable as long as they're not too out of sector? If that makes sense.
I'm trying not to disperse too much because management time is also critical. I've
Yeah.
been part of teams that have done M&A since 2001,
Yeah.
and it's very important that you actually acquire assets which are synergistic, that you can integrate into your platform, because otherwise, these so-called profits disappear very quickly
Mm-hmm.
if you are unable to do it and repeat it year after year.
Yeah.
So I'm trying to be very disciplined in terms of what we look at and what we acquire, so that we don't, waste time and effort in trying to do something which is not in our playbook, so to speak.
Yeah, yeah. And then looking back at the cash situation, some obviously you've been buying a huge amount of shares at 45% and joked that, you might end up buying the entire float if you just kept buying. So, but maybe, I mean, where do you draw the line? Could maybe the company start to do share buybacks? Is that something you've have talked about internally at all?
Well, the thing is that there is this dilemma of the float as
Mm.
well. So if we buy back all the stock which we could, there will be no float left. So what's
Yeah.
the point of being public then? So
Hmm.
I think we have to balance off that with having the float. So I think it's more important to get the message out there,
Yeah.
to make sure that people understand us rather than just effect buybacks. I mean, we have
Yeah.
said in the past that we will look at dividends at the right time once growth as a priority sort of stabilizes or reduces. At this point, I think growth is a priority. We need to add to EBITDA to get to a certain point where multiple growth and growth in EBITDA combined can drive the share price. Then at some point, we can look at dividends as another driver
Mm.
of the share price. But at this point, buybacks, I don't think make sense.
Yeah, no, that's helpful. Let the business do the talking, maybe do some dividends in the future. Really like the sound of that. And then just drilling down the Q shipping acquisition, which we've been talking about. So yeah, it was 200,000 for 9 vessels and a crewing base in, as you mentioned, Turkey and the Netherlands, and now with a sort of Ukraine base as well. And that is a striking price, as we said earlier. One vessel could potentially earn that on a single voyage. Is that true in this case? I mean, normally it's between sort of 50 and 390,000 per voyage. I mean, how much could some of these ships be earning for you guys?
Look, the acquisition, the company that we acquired is a technical management company.
Yeah.
It's not the one that's doing commercial management with those kind of commissions,
Hmm.
but it also opens the door to relationships where we could take over commercial. So just today we have approached a company based in Holland, where we have the door opener was the technical, but we also offered them commercial management. So
Hmm.
effectively, we could do both for them.
Yeah.
Uh, so I think that the opening in Holland and in Turkey will basically give us access to a new set of clients.
Hmm.
Some who we already know in Turkey, some we don't know in
Yeah.
Holland. That could open up a growth on the technical management side and give us scale, because that's where we can build up a huge amount of scale. That on the technical, if I go extreme, we could be managing hundreds of vessels.
Yeah.
Whereas we're only doing 16. So there is a long way to go on that. And then I'm also very much interested in man management. I think, or people management, let's call it, not man management, but because I think that, not only is my business a people business, but also what we do in terms of seafaring, besides the asset, the ship, is the people who actually run the asset. And going forward, even now, there is a shortage of people. So I want to get into that business in a big way,
Mm.
where we can actually, manage people and make a good earnings from doing that, besides doing technical.
Yeah.
So we do man management for or people management for not just our vessels, but also for other people's vessels. But that's also an opportunity. So I think that the door has opened, and this could go far and wide in terms of expanding. I mean, there are companies out there that do technical management, and they make 100 million EBITDA.
Yeah.
And there's no reason why we can't get there in time,
Yeah.
uh, to build a company out that is a rival to some of the top companies out there. The difference is in the mentality, whereas I think more from a ship owner standpoint, because this
Mm.
is my background. So I look at the asset owner and see what the asset owner wants and how they want their asset run,
Mm.
rather than just looking at it from a third party manager standpoint, saying, oh, how do I make money from the ship?
Yeah, yeah. And also the technical side maybe is more hands-on with what would you say the margins are? I mean, from technical, maybe you're making, 10 to 50,000 per engagement, and then commercial you're making 100 to 500,000 to 390,000. So yeah, would you
Yeah, I mean,
say
the
mm,
margins are definitely lower, as you mentioned. However, the volumes are much bigger.
yeah.
I mean, on a commercial, although there's no real cap, but in terms of the let's say defined market where we have the opportunity, it's let's say a couple of hundred vessels.
Mm,
Whereas on technical, I can have 50,000 vessels. There's no
mm,
limit to the number of vessels I can manage technically. So the margin may be smaller, but the volumes can be much, much larger.
mm, mm. And then sort of beyond vessel counts, how, I mean, it's great. You've kind of got you expanding this client base. I mean, one criticism before was like almost a slight concentration on client base. If your sort of top ship owners and relationships walked away in an unusual scenario that's probably never going to happen, but how exposed would Heidmar be? I mean, now you've obviously got all these relationships and you're kind of in full flow.
And look, I mean, every day as we add ships from different people, that concentration risk is reducing.
Yeah.
And this is the reason why on the technical side as well, as we add vessels, as we add capabilities, the concentration keeps going down.
Yeah.
Uh, the concentration is a double-edged sword because the way you described it, it's negative.
Mm,
Whereas on the positive side, I have my biggest client has another 4 or 5 new buildings coming in the second half of this year
mm,
and has an order book of another 25 vessels. So
mm.
that gives me comfort that I have all this inbuilt growth in the company, and the investors should also see it that way. Of course, the flip side is that if I don't perform, then they could leave as well.
Yeah.
But this is what I live with on a day-to-day basis, that I
Yeah.
have to perform to keep all my clients, not just the largest client.
Yeah. Yeah. And absolutely, I don't mean there's anyone in the space that competes with you guys. They're all staying because the retention of all of these is huge because they're not getting better deals anywhere else. And it's also limited risk because, as we talked about, the sort of Airbnb model, property model, even if you lost some of those obligations, it's not like you then immediately lose loads of income or capital straight away. So yeah, it's good. I'm just gonna move on to here. I mean, we have talked about the margins already. I mean, we've talked north of 55%. Um, some investors read that as net margin. What does it sort of look like once all costs are included?
It is sense a net income margin, right?
Mm.
So the margins are high, and my net income and EBITDA are the same.
Yeah.
Uh, so the net income margins are around 50%. They are quite high for the business because also AI going forward is going to let's say keep my G&A under control. So even
Mm.
as I grow, my G&A is not going to grow with that exponentially. So the G&A stays under control with the implementation of AI and other measures. So, in the sense, my net income margin should stay around this level.
Mm, mm. That's really good. And then sort of just a quick one on follow through from these earnings. I mean, there have been criticisms. Oh, like we've said earlier, this is not just a Hormuz play, but some people have said that. So what would you like to see are the sort of markers of on terms of follow through of this turnaround rather than just a peak going to Q2, Q3. I think obviously Q2 is going to be huge as well, but what's the sort of follow through moving forward? Are you now almost unstoppable because you've kind of broken that threshold and now you're just getting more and more ships?
Yeah, so I mean, look, the rates are still very strong. Across the board, today the market is strong, both on crude and on product. And the number of ships that we are managing is increasing every quarter.
Mm,
Uh, so in that sense, it's only going up, and the GNA is not going up.
mm.
So I don't see why quarter on
Anything
quarter
else?
the earnings should not
Mm,
improve. There is some seasonality, of course, as I told you that. The cargoes were not as many when the straits opened up, but eventually all those cargoes will come out. So this does not happen in Q2, it will happen in the
Mm,
second half of Q3 or will happen in Q4. If it happens in Q4 combined with the increase in winter demand, then we're going to see a huge spike in rates.
mm,
So I think that it's just if things didn't happen in Q2, we will see that postponed for the next 1 year that the rates will be very strong. So I'm very bullish about the market.
mm. And I think it's also important for people to, I mean, we've mentioned it earlier that the chaos and the things that are happening in Hormuz is a tailwind for you guys and is a increase in earnings, but not, a huge material big deal. It
The
obviously,
story, it's not the case.
yeah,
Our Q1 results, for example, were more or less without having an impact of the war
yeah.
in it.
Didn't really include it, and as you said earlier, it's kind of 5 to 10%, and I think that's a fair analysis, especially bearing in mind you were already at 250,000 for some of these vessels anyway before, and then sort of looking at the share count and insider activity and cap table. You do have an equity line with B. Riley, but have not needed to use that, and very little of it. And 0.4%, which is like the smallest bit of dilution I think I've seen from a public company. But under what conditions maybe would you draw from that, or were you even maybe considering of just closing a book there and not using it?
No, look, I firmly believe that the whole point of going public was to have
Hmm.
access to the public capital markets. So keeping that line of credit open, the ELOC, gives me flexibility if required.
Mm,
Uh, Many companies would have a shelf file and an ATM file where they would be just sitting on it.
mm,
I have some of my clients, other publicly listed companies, tanker companies have shelves and ATMs just sitting there.
mm.
It's a tool which they may never use, but it's a tool there. So it's the same thing that we did this at the time where we could not file a shelf, so we have the ELOC. Since I've spent the money, I might as well keep it for the time being and see how it goes if I need it, if there's a large deal that comes up, if the stock price is right, etc., etc.
Yeah,
It's not something that I'm going to do for the sake of it, and I have proven it.
mm,
We've been
exactly.
sitting on this ELOC all this while. We didn't use it when the stock price was above 150. We obviously didn't use it when it was below a buck, and we again did not use it over the last 2 months when the stock price went back up.
Yeah.
So it's a tool, and it will be there. It's there in case I have some need, but at this point, we don't envisage using it.
Yeah, yeah. You almost set it up at the very beginning before we were in the picture now, where you've got 50 and 16 vessels, 50 under commercial, 16 under technical. That wasn't a picture before, and obviously that was when you did a deal there, and you've still spent the money, and like you said, may as well leave it there for the time being. Um, and obviously you own 45% and insiders own 90%, which any dilution is only going to hurt you guys as well. And there hasn't been any. So, well, 0.4% if people really want to draw the numbers down and be critical. Um, is there anything more you can lay out in terms of the cap table and ownership, in terms of who owns what and where things are? Or do you think investors can go look for that themselves personally?
No, they can look. I mean, we have said clearly that between me and my partner, we own 90% of the company. Nothing has changed over there. None of our shares are registered. We haven't sold a single share. If anything, I have bought more shares. So, we're not. We did not list to sell. If we wanted
Yeah.
to sell, we could have sold it without listing and incurring the cost of it, and going through this process for the last 12 odd months
Yeah,
now.
yeah, absolutely. A couple of people actually did mention, was it warrants or option increases? I mean, it was only a small amount. I think we're at 50 million shares, and now there's maybe 60 million, including those warrants. But obviously, they're not necessarily exercised. Is that correct, or am I wrong there?
Yeah, that's true that we have an equity incentive plan.
Hmm.
So there are those, but of course, as you said, that they have not been exercised. So
Exactly. Yeah.
when you look at the full diluted count, that's why you see the full number of shares.
Yeah, yeah. And Heidmar actually has limited institutional ownership, and we touched on it last time how retail actually like deep value, and sometimes these institutions take a little bit of time to get reassured and move in. But actually, I would say now is the time for some of those people, and we have been doing some outreach to some. Um, I mean, would you say now is the time for those potential strategic partners, but then also just those institutions to buy in the market? And what protections would you say there are for minority holders?
Look, I mean, we have an independent board, even though we were not required to. We have three fully independent directors. They are also the three who are on the audit committee. We have Deloitte as our auditors, not just now when we went public. Deloitte has been our auditors for 20 years. And as I said, we are fully aligned with the shareholders because we own, as insiders, 90% of the shares. So hurting the shareholders only hurts us.
Mm,
So we don't see that as a problem. In terms of timing, look, everyone has to make their own determination, but with the stock trading where it is too cheap. I mean, it's the only way to describe it. So I don't see any reason why anybody, whether it's a institution or a retail shareholder, should not get into the stock.
exactly, yeah. And I appreciate the great answers here. It was very, very transparent. I don't think we're leaving any stone unturned. And going to sort of edge governance and competition, I mean, we've kind of shown that there's not really any competition in this ship servicing space. Maybe just maybe going back to you in your early days and companies you've managed, lesson learned on one side, but then also maybe standout wins. Is there anything you'd like to share there as well?
Look, I think we have been very careful on the governance side to make sure that we didn't just comply with what was required. We have done over and above that. We are publishing all our quarterly reports. We are filing 6 monthly on our financials. We have
Mm,
Deloitte auditing and providing comfort all through. As I said, we have three real directors who are industry professionals. One he was a broker all his life, so he has full tanker knowledge. Used to be a VLCC broker. The
mm,
other guy is ex-banker who's now working, lending money out, running a fund. And the third guy is again an industry guy who has been involved in ship management, has was working for a ship owner, dry cargo, worked for a trader. So there are people with deep industry expertise who are on the board. So we've done everything right from a governance standpoint.
mm.
And I think it's critical that people recognize that.
Yeah, no, exactly. I mean, are there any competitors? I mean, zooming out, is there anyone even that even competes in the way you do? And why do those ship owners then choose you? I mean, we have addressed it already.
So
Yeah,
if anything, my competitors are shrinking and may probably get out of the business.
yeah,
Without naming names, three or four of my competitors, the large ones, are actually owned by other ship owners.
mm,
Themselves. So I mean, I can say Hafnia, for example, is a
yeah,
publicly listed company, has a pooling business. Maersk is a private company, has a pooling business.
mm,
Scorpio is a public company, has a pooling business.
mm.
Norton is a public company, has a pooling business.
But they're all shrinking. Yeah, that's a really
Yeah,
good
but
point.
pooling is not their core business and core activity.
Mm,
Whereas commercial management and pooling is my core activity. This is what
yeah,
I live and die
live and
by.
breathe.
So people recognize that when they come across and they see the difference in an entity which is fully focused on servicing their needs rather than just servicing the ship owner's need. So we see people coming across and asking us more and more questions about our services.
Yeah, yeah, absolutely. And very near the end here, there was and this is for some, very easy to answer, and others who haven't really read the filings, don't really understand it. But your CFO, stepped down at the end of May, and it was after the earnings, not during, and it wasn't chaotic. But some have tried to pull on that in terms of the timing. I mean, what sort of reassurance could you offer those people?
Look, this business runs. I have built this business back up from scratch when I started back in 2020. At the time, I have run this company as CFO and CEO.
Mm,
There are times that you will have personnel leave. It's unfortunate. Fortunately for us, as you said, it was not chaotic at all. Results were completely done.
mm,
We announced it, and it happened thereafter. We have had the good fortune that we have had lots of very good candidates for the replacement. And we think that in the next few weeks, we'll be able to announce
mm.
a replacement, and it will be a very strong replacement and will put us in a position that going forward, our finance and accounting team will be much stronger than what it was 2 months ago when this happened.
No problem. That's really, really good. And you've regained NASDAQ compliance in June, and the stock is now trading above its 200-day moving average for the first time ever, and on top of the first ever profits ever. Would you say the turnaround is unfolding exactly as planned?
I think from a business standpoint, I can say definitely the business is doing
Yeah.
way better than what it was last year, and it continues to do better. There
Mm.
are a lot of things which I'm working on. If those come to fruition, it takes us to the next level and next level. However, the stock does not reflect that, obviously.
Yeah.
I still think that the stock is way undervalued as compared
Yeah.
to where it should be. But I think there is more recognition of what the company has been doing and the steps we have taken to get it to the right place. So I think eventually we'll get there, but with all these things, it takes time. The building belief, building trust takes
Yeah.
time. We have to show the results again and again and again every quarter, and then people will believe us.
Yeah, no, it's funny because I remember telling people at 80 cents, and then there'd be people, oh, but I want it at slightly lower because it's where it is, and it's typical retail mindset. And then the price goes to 170, and then now where we are here, you have the same conversations with people, and it's you just have to keep delivering, and eventually it clicks with people. I mean, analysts have price targets many times higher than here, free and sort of $5. Yet the market is still where it is. Despite sort of everything we've discussed, what would you say the single proof point would be for those people to understand that? I think it is just delivering on the business, I think. But is there anything else you'd like to say there?
No, I think that people will see that we are delivering consistently
Mm,
in all respects. So there isn't one place where they can point that, oh, we didn't do this, we said we would do that, and we didn't do this. So I think in the next quarter and through this year, you will see that things keep going in the direction that we have been telling people. So when they see that consistency,
mm.
I think that's when people realize that there is something happening over here.
Yeah. And then maybe just a fun thing for people watching who have stayed to the end and deserve extra sort of sauce. What would be a good scorecard, and what would you like to be judged on from a year from now? Would you say volume and fleet size, revenue, profit? And then maybe you would add in rates as a sort of cherry on top, as that 5 to 10% area.
This industry is highly unpredictable at the end of the day, but especially given everything we have gone through the last 4 months, and it changes on a dime every day. But for us, for the tanker industry, fortunately or unfortunately, disruptions are generally positive
Yeah.
through history. This is not the first time this is happening. Through history, disruptions for tanker shipping are positive.
Mm,
So we are going through that period and a heightened period of that. And it's not just the last 4 months, it's the last 4.5 years.
mm,
So I think that this market carries on. My scorecard is basically, number of ships is a critical metric because it's a vote from the clients in terms of they vote with their feet. If we don't perform, they leave,
mm,
and if we perform, we get more and more ships.
mm.
So right now we have shown for the last year and a half that we're getting more and more ships. And even in the past, when we lost ship, it wasn't because we didn't have performance; it's because people sold ships.
Yeah.
So now, on the other hand, people are buying vessels and they're giving it to us. People are leaving other pools and coming to us, and people are who have ordered ships and new buildings are also coming to us. So I think overall, the number of ships is a good metric to watch for us. And then, of course, profitability will come through from that.
Yeah, absolutely. And it's not even just a single straight line. It's actually like an exponential line. As you get those new clients, as you've done the acquisition you've done recently, you then generate more relationships, and that line literally is like that. And that's not an exaggeration. I mean, we've only been connected since May, and I think yeah, maybe it was 40, 45 ships, and now we're basically approaching 60, and that was just in a few months. Versus, the previous time it took to get to that point is hugely exponential, and it's very impressive. But thank you very much, Pankaj, and I think there's a lot for people to really understand and learn from this. So speak again soon, and let's keep moving.